Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is May the 30th, 2023. It is now 2:47 p.m. Central Time. I haven't put a report out for a few days. I took a few days off during the Memorial Day holiday and long weekend, but during that time, we did get the release of the personal consumption expenditures report for the numbers of April. So in May, we get April's numbers. Okay, so unfortunately, that report came out not really what we wanted. Showed inflation slightly increasing. Now, we just believe that this is a little bit of a bump in the road. Of course, inflation is coming down. Everyone can see that. If you look at any long term chart, you can see inflation coming down heavily over the past year. But you can have a bump in the road, which is what we had, instead of seeing what we were hoping for, which was a dramatic drop in inflation for the month of the reading for the month of April. So unfortunately, home loan interest rates did not like that. We've had a rough run for the past few days. Now, also, we have the issues with the debt ceiling. So there's still being some debate with what's going to happen with the debt ceiling. And here's what you need to understand when it comes to home loan interest rates and the debt ceiling. If the United States government increases the debt ceiling and creates more federal debt, that is one of the ways that they allow the creation of more federal debt. That is then going to create an issuance of government bonds. And when more bonds are put on the market, they compete with mortgage backed securities, which in a competitive market, more inventory means that we have to increase the return on that inventory to attract buyers. Now, interesting how the federal government, how this all works. That I mean, imagine if I could just issue a bond for the family of Brent Bruce and then have my corporation behind me buy all those bonds, which is what you would call the Fed. So the Treasury issues the bonds, the Fed can buy the bonds, all of a sudden the government has money, and the Fed just keeps that on their books. Now, we're not going to get too much further into that. We don't see that happening with all of the bonds. We think that most of the bonds that are going to be created from the debt ceiling increase are going to be put out on the regular market. Hopefully, they'll be for shorter durations than the 10-year and the 30-year, which would be more direct competitors with mortgage-backed securities. So let's take a look and see where we are right now on our actual charts and the Brent Bruce daily home loan interest rates. Okay, so right now we're having a good day as we're hearing talks that the negotiations for the debt ceiling are starting to get resolved. We're up 55 basis points right now on the mortgage-backed security. We are down 8 basis points on the 10-year Treasury, which is great to see here, getting down closer to that 350 number, which we always like to be at. Take a look at the chart here for the mortgage-backed security, the bad run that we have been on. So again, if you're new to this channel, when this goes down, home loan interest rates go up. So you see a long run of home loan interest rates in general going up during the past 10 days, basically. And then we are now looking at today showing a good day here. Stretch that out a little bit here. Showing a very good day, up 55 basis points at this time, going up and kind of starting to maybe get closer here to this Fibonacci level before we can start getting to where we need to go. Now, interestingly enough, if I push this out a full year, we are not down the lowest that we have been here on the mortgage-backed security. At this point, back in October of 2022, we were all the way down here at 96.82, and right now we're sitting up here just above this Fibonacci level here, which is about 98.74. So we are not in the worst shape that we have been in, but we're not where we wanted to be, which at this time we were hoping to be up in this range here. So what does that look like as far as the home loan interest rates right now? You probably have been hearing that rates were pushing back into the mid sevens. Most banks would probably have been selling mid sevens by the end of the day on Friday. Now, today earlier, I came in here and I pulled up the Brent Bruce daily interest rate, and we were at 7.125, which I believe is the highest I had been at since I started this and started putting these reports out over a year ago. So yes, this is a bounce quite a bit higher instead of where we were expecting to be, at least where I was expecting to be here, getting close to the fours by this point. So a lot is going to have to happen in order for that to come through. Now, as we get further down the month here, we do have a lot going on, and we're going to start talking about at one point, if we are not where we needed to be or where I had projected, we're going to talk about at one point again, probably in sometime in July, what happened? Why didn't we hit those numbers that we were projecting? So let's open this up here. Take a look at where we are on our Brent Bruce Daily 30-year fixed conventional home loan, our very well qualified 800 FICO score, 25% down. Right now, 6.999 with a little bit of a credit of $25. Now, when you see a credit of $25 at a 6.999, I want you to understand there are people making these decisions, and you can see how close they're getting. They want to be able to offer a 6.999 essentially with no points, because when somebody, not just me, but when other people say, show me what the lowest interest rate in the whole market is under 7%, they want to make sure that they come up in that range. So they are aggressive to get to this point. Now, what is it to get to that 5.999 that we like to always pay attention to? Currently about 2.2 points. And you remember when we were talking about less than a half a point, I think at one point it was like zero point 0.3 points to offer that 5.999. So we have definitely had a retraction and an increase in home loan interest rates over the past about 2 months instead of the opposite, which is what I had been actually projecting. So we're going to have to look closer into that once things begin to shake out. So let's take a look here and see what is going on here with our parameters. This is the parameters that we just priced out right now. And again, we were looking at United Wholesales is at the front of the pack here, 6.999 available with just a little bit of a credit of $25. Now, somebody wants to go ahead and pay a point, you're at 6.5. We'd probably get down to 6.499. We can price that out and be just about 1 point in cost as of today. Right now, we'll continue to see what happens with the debt ceiling, what goes on there, how that all shakes out. We do have a PCE, a CPI, a PPI, and the Fed is going to be making their announcement to what they're going to do with the federal funds rate. I believe that is on June 16th. So we have a lot going on this month, pivotal month. Home prices are showing to be starting to go back up on Case-Shiller, Zillow reports, and other. So again, those who are waiting for the home prices to drop, it's not happening right now. Let me know what your thoughts are, if you agree, and I will get back with you again tomorrow.